This episode of Profiles in Risk is sponsored by the InsurTech Hartford Symposium 2024. Insurance Nerds has been involved with InsurTech Hartford almost since the beginning, and it has always been a fantastic event. This year, the InsurTech Hartford Symposium is on April 17th and 18th at the Mohegan Sun Casino, an absolutely amazing venue. The symposium is more than a conference, it's an experience. With more than just panels, we also have workshops and roundtables. This year, the keynotes are by C-suite executives from Nationwide and Travelers. There is simply no better place to meet top insurtech influencers and others making waves in insurance, who are getting recognized during the second annual Making Waves Award. This year, I am super excited to be one of the honorees. Come join us for one of the best insurtech events of the year and use our promo code SAVE250-NERDS to save $250 off of your admission. Learn more at insurtechhartfordsymposium.com and don't forget to use our promo code SAVE250-NERDS to save $250 off of your admission. Now, on to the show. Hello and welcome to Profiles in Risk. This is your host, Tony Canyons, and today I have with me Jay Menna.
Howdy.
Founder and CEO? Founder and president at Underwriters Technologies. How's it going today?
Very, very good. Thanks for having me.
Thank you for joining today. For the listeners, so the first time we chatted, we connected on the fact that I am an aspiring magician or a learning magician, and Jay's sister is a professional magician. Jay's actually provided some guidance on my magic, and I'm very thankful for that.
Yeah.
So I am back in Atlanta. It looks like you're in Austin, but you mentioned you're heading to Atlanta in a couple of days.
I'll be in
How,
Atlanta.
how it's March in Austin, so I'm guessing that right now it's beautiful, and you're a couple of weeks away from the gates of the oven opening up and being just incredibly warm down there.
Yeah, the blue bonnets are out in force here. It's pretty as heck. The only problem is South by Southwest has hit Austin, which is a lot of fun. But if you're from Austin, you just want to get the heck out.
Makes absolutely perfect sense. Absolutely perfect sense. All right. So we always give the guest the chance to give the elevator pitch. What is Underwriter Technologies?
We write an online rate bind and issue platform for people with specialty programs. We've done it for about 100 different specialty programs over the last 20 years. I used to own a piece of a company called Virtual MGA, sold that off. So this is kind of an updating of that platform, so to speak. We've written everything from hot air balloon insurance to private zookeepers insurance, and we used to have a throwaway line that was we've done everything except for equine mortality. And a few years ago, lo and behold, someone brought us an equine mortality account, so we write a platform for equine mortality on top of it.
All right. So for the listeners, your average broker that sees a weird account and their first reaction is to call it MGA. Should they take a look at the website?
No, we're the back end for the MGA.
Okay, fantastic.
So we did about 100 of them, and what we found out is they're really the same. You know, there's different nuances in the darn thing, but we sat down in the middle of COVID, threw 40 of them on the desk, and started drawing flowcharts. And it turns out there are 477 steps that happen in the life of an insurance policy. Now, some GAs have something really strange, like they need the total insured values of ironclad metal buildings within 5 kilometers of the coast, sort of a thing. All right, that's a special report. That's outside the 477 steps. But the first step is, what underwriter do I give this to? Do I do it based on underwriting assignment? Do I do it based on who is there a state? Sometimes you can't even assign it until we've got something in the application because of the sign of it. And we wrote a piece of software with 477 hooks in it. The idea being is that we can configure those things much more rapidly. And it turns out the average broker deviates about 70 steps from that preset 477 path, all of them very, very different. So, it comes down to just literally configuring that out. What we have noticed is there's a couple things that don't come out the same. The syntax of the policy number, that TX-37-0119 kind of thing.
Mm-hmm.
That we've never seen it happen the same way twice. Howdy. Well, actually, we've never seen the syntax number of a policy come out the same way twice. Everybody has a very, very long string of stuff. We've seen, but other than that, everything seems to be within those 477 steps. Do you bring it in? You have to re-clear it. You have to bind it. You have to issue it. You set it out the door. And on top of that, we time everything. We know every single click, every single download, everything, and that tells us an awful lot as to what can and can't be done or what should be done.
Okay. So who is the perfect partner for you guys? And my apologies, I'm eating while we chat. The crazy day. The, so who is the perfect partner? Is that an MGA, MGU, specialty insurance?
Yeah, anybody in specialty coverage
Okay.
needs to issue the policy, needs to set out the border row,
Good.
needs to do agency bill and all that sort of stuff. Those are kind of our perfect partners. We see a lot of companies out there trying to do it themselves. You absolutely can do it. It has nothing to do with whiz bang technology. It's just business process. It's just good.
Okay.
But we can do it 10 times better, or because we can spend 10 times more money and we can aggregate the cost of doing the business.
And you've been doing it for a long time.
20 years.
Specifically this, yes. Specifically for.
Yeah. In the past, it started out, I had a GA and I've also birthed a carrier, and putting all that together, these data needs came from that.
Okay. So would it be fair to say, listeners, if you're an MGA or specialty insurance and your clients are not actively telling you they absolutely love quoting and binding with you because it's so much better than everybody else. So unless you're getting that, it would make sense to at least look at Underwriters Technologies.
Yeah, absolutely. And we got a little trick coming up. We just got the provisional patent back for thing. We looked at what people were using our systems for. It turns out, no matter how good the system is, you spend most of your time doing data input. It's just the nature of the beast. If you write the account, you spend 25% of your time putting the data in. If you don't write the account because you aren't doing anything else, you spend 50-70% of your time doing into it. So we've been working with some AI guys, and we've got it now that we'll take your application and just, if it gets emailed to you, just drop it on the screen and it'll transcribe it in. Somebody else's application. It was kind of a joke around the office that the broker only gives you a napkin and last year's deck page. So we do a napkin in last year's deck page. It'll suck the data off on it. Car insurance, we just need a picture of the driver's license and the registration, and it just transfers all that data out. And so that's a product we're coming out with here in the next couple of weeks. We finally got the patent. We can finally talk about it.
Fantastic. So what does the process look like? So if I were an MGA, and some level of technology, right? From like file folders to, I don't know, Epic. I have no idea what MGAs run on. Right. How does the process look like to bring Underwriting Technologies to run my backend?
Hand us an underwriting guide or hand us a line slip from London, and we'll come back with a proposal. We'll say, look, in looking at this, we think we can do it based on this. We'll come out for a day and decide whether we can or we can't after we do a deeper dive. And then we make the decision, do we both want to go forward on this?
Okay. So you said something really interesting. Whether we can or we can't. What kind of things tend to lead you to like, not really our thing?
Well, we're a back-end system. We've had people try and use it for things that it's not, or we've had people say, well, I have this old system that somebody programmed here. We just want you to duplicate that. Well, that's not what we do. We have a defined system for the process, sort of a thing. And some people don't hear that. They just hear computer and they want you to come up and look at something. It's frustrating.
All right. So the very front page of the website, there's 477 steps in the life cycle. You mentioned that, which is a lot more than I expected, by the way, but I've never been a broker.
A lot of them are
Um,
time.
uh, for a modern MGA or program manager, rate find issue isn't enough. Why? So like in fact, I think most are not even at the rate by issue online.
Right.
Uh,
Well, I mean, what we try and do is if you notice on all of our stuff, there's a clock that's running. We keep track of it, the exact number of seconds that underwriter spends on a file, so we can tell you, okay, you're doing better in New York than you are in Florida on a underwriting time per profitable dollar of premium that comes out, or it can be this line or that line. But what we can really tell you is where you're wasting your time. Everybody out there tells you, look, we got a rate binding issue system. It'll save you a fortune. Okay, how much? I can tell you down to the second, down to the penny, how much. And that comes from, I lived years in Japan I worked in a car factory of all things right out of college. And they had Mitsubishi cars had a giant number over the production line that was 61. And if it went below 61 cars an hour, everybody on the production line knew it. And they figured out what was going on. They kicked it up. And man, since then we want to measure, see, make things faster. If the average application takes you 10 minutes in 2024, let's get it down to 8 minutes in 2025, if we can. Right? We don't want to in any way sacrifice underwriting profitability. There's a lot of insurtech out there that doesn't quite get that, but underwriting profitability as efficiently as possible.
underwriting profitability as efficiently as possible. That's a great line. What is the implementation like? So you give me a proposal,
Mhm.
assuming that I have the average level of technology of an MGA today. No idea what that is, but
Right.
uh, how painful? How long will it take? How much will it cost to implement?
It used to be really, really painful, sometimes taking a year or more to get it up. Now that we have this shell, the first one we implemented took us 130 days or something like that. And that really wasn't fair because it was one line of insurance. It was actually people were insuring folks going into a trade show and they just needed that certificate of insurance to get in general liability. But then we turn around in the one that I mentioned earlier that is in Atlanta that I'm coming to see. We implemented really complex GL, PL, TRIA, lots of hired non-owned all as part of it. We did it in 93 days.
Okay, so about 3 months is a fair expectation.
Yeah, it should take us about 3 months. We will guarantee that we'll get your underwriters to re-question what they're doing. We've sat in some of those meetings, and one underwriter says we do it this way, and another underwriter says we do it that way, and they
Uh-huh.
both are 10 years saying no, we don't, no, we don't. And the other one is sometimes, obviously, when you're programming these things, we want to know what you do. Most of the time is not good enough, all of the time. Now, one of the things we do is we give the underwriter what we call the sharp knife. Okay. We're not going to stop the underwriter from binding something that's outside of underwriting authority. We put a big old red flashing thing that says, look, you're about to go outside and violate your underwriting authority, but they need to sometimes.
Well, thank you for the flashing thing, right? So I'm a former admitted underwriter.
Right.
I underwrote for Nationwide Ag Small Business, and then I underwrote for Liberty Middle Market. At Liberty Middle Market, amazing company, loved working for them. My authority letter was an Excel file with 60 tabs on it,
Right.
and I it wasn't like I remember during the interview process the no, it wasn't the interview process. I had already started. I had started, and in one of the first meetings with my manager, as I'm getting trained, we talked about the authority level, and then he said every time we have a review, we'll go over how closely you stuck to your authority, and we expect you to be at above, I don't remember the number, 85%, 90%. And I was like, hold on. My understanding was if I go outside my authority without getting authority from you or whoever, I get fired. What do you mean not 100%? Well, it was so complex that
Yeah.
they knew something was going to get missed. At least they weren't punishing us for it. Uh,
They
so
made
I would have loved a notice of, hey, this is beyond your authority. Have you gotten approval?
plus all those pain in the neck little steps that you got to do. I mean, you're supposed to clear everything with the OFAC database to make sure you're not insuring a terrorist. Now, who's doing that?
We yeah. Mm-hmm.
Now we throw it up, we run it for you, and we click on it, and we stuff a note in the file. That's the most important thing. We always stuff in a note in the file that it was done. So when the auditors come in, because somebody's going to get burned. Somebody somewhere is going to get burned really, really, really bad. Other little things like we don't send any files over email. We send secure links.
Okay.
Time to stop. Somebody's going to get burned on that. Plus, we can also see that, how the broker's on you. You didn't send it to me. I said, look, I sent it to you 3 times. I can see by the logs here that you downloaded it 4 times. Once was at home, 3 times were at the office, and the last time was 4 hours ago. Cut it out. We can see all of that.
Okay, so it sounds like you're beyond compliance.
Yeah, no, we want perfect compliance, and we want to be able to prove that you're compliant. I mean, one of the red things that most people don't look up with them is that broker's license still valid? You've been doing recent, license.
Oh yeah.
I've been doing business with them for 7 years. I'm not going to go look up their license every time I bind them. The system can. It'll put a little red tag up there. Or if you're working on an account, it'll say, hey, there's notice of intent to cancel on this one. Why are we processing an endorsement?
That would be really helpful too.
So,
what is the pricing like?
typically, we're somewhere in the $50,000 to $60,000 range for the first initial implementation. As we stack multiple, we have to, if it's for the same customer, then obviously it goes down. There's server costs and security costs and all that sort of stuff we take care of. The other nice thing is I've got guys that have to, we have someone on. How can I say? We have a system we call "You've Got the Football," and somebody always has the football. And that person has to be, that particular programmer is responsible for security and watching to make sure there's the servers up and everything. And that means even on New Year's Eve, I have somebody sober near a keyboard watching this thing, because that's when somebody from overseas is going to try and hack it.
Okay. So there's a setup fee, which varies depending on what you need.
Mm-hmm.
And then ongoing, is it based on activity? Is it based on number of heads?
Flat rate. Just a flat rate. If we have to increase the server size because you're getting a lot of loads, it may go up a little bit. But many of these models where they're trying to tax the premium that's going through it, you might be able to get away with that in the early days of a new technology, but it's not sustainable. And nobody wants to pay a tax.
Okay. So how big of an MGA do I have to be for this to make sense?
We seem to see it depends on the work levels of it, but anything we find the break even is at about a $4 million book. And anything over that seems to work fine. The dilemma is getting, once you're to that $4 million book, then you're trying to do your business and backfill stuff. So if you're on the solid trajectory to get to the 4 million, implement it.
All right. Looking at the website, I've looked at hundreds of technology providers' websites, and I don't remember another time seeing a tab for Angel/VC.
Okay.
So
Here's
you guys also play a little bit.
I'm an old fart. All right. I run the place. We're a boutique shop. We're 12 guys.
Okay.
And if it's not fun, I don't want to do it.
Fantastic.
We just life is too much fun when you're having fun, and it stinks when you're not, sort of a thing. Things that we do is we know that there's a lot of insurtech startups, and a lot of things. One of the things that you need a license, you need capacity, and you need an operating system. If we believe in what you're doing as a startup, we'll trade you systems and configurations and everything else for equity rather than straight up. And when there's a group of guys that I do a lot of business with, we may even put money in on the top of the thing and invest in it. Right. I mean, haven't done one to date. Have looked at a couple of them. There's some crazy.
Thank you for the honesty. I love the honesty. We live in an environment where there's a lot of hyperbolic speaking, and sometimes the back end is like the true story. I chatted with an insurtech. I didn't happen to have them on the podcast. It was I had been there. We had chatted before they started. Then they started, and they pivoted, and we chatted about a year later, not on the podcast. And they looked at their website, and they shared that they were still doing court forms via PDF on the back end while they built the technology.
Yeah.
Right?
Oh,
There's
God.
a lot of that.
Yeah, there's a lot of smoke and mirrors.
So thank you for the honesty that like, hey, we'll consider, and especially for this types of operations.
We only
Uh,
put that. Then we only decided we were going to do that at the beginning of this year, so it really hasn't had time to do it. I will tell you, we are interested in underwriting profitability. I have advised and sat through, and I also work as a mentor at a place called Capital Factory in Austin, and having insurance in my profile, so I get a lot of crazy calls. I got sucked into well, let's just say it's an insurtech play named after a large animal and has a rather large presence here in Austin. So
okay.
we went to their kickoff party and they had that large animal at the party, and I'm sitting there thinking, you guys haven't made $1 and you're spending investors' money on bringing a large zoo animal to the thing.
A very dangerous one too.
Now this one wasn't so dangerous. You're missing it.
Okay.
But you know, man, old-fashioned profitability has to come in there.
And
Silicon Valley is having a hard time understanding what insurance is, and they're throwing a lot of money in a lot of crazy directions.
And I think that the silver lining of the decline, or the silver lining of the increase in interest rates leading to a decline in venture capital investments, which has made it incredibly hard to raise money in insurtech. It's possible, but much harder. The silver lining is the industry is maturing,
Right.
and like you can't raise money without some level of product, some level of customers, and a pathway to profitability, right? And it didn't used to be that way. It used to be like the back of a napkin. I saw it plenty of times.
Well, it was weird because these VC guys seem to not understand that the cost of production of insurance comes after the sale, not before.
Yeah, well, they 100% they didn't. That's the thing with our industry. It it is. I participated back in my Nationwide days. I participated in a simulation internal at Nationwide twice, and my team won the second time, which I was really excited about. But basically, you simulate running a little insurance company, and the part that stuck with me forever, and the reason I didn't win the first time I participated, is fast growth is easy in insurance.
Yeah.
Profitability is very hard after year 3, 4, 5, right?
Oh, it's crazy.
So unless you've lived it, or in my case, played through a simulation that helped me understand it, it's very hard to get your mind around a really weird business where we don't know the cost of goods sold for the policy we're selling you.
Yeah.
Right? We have a good guess of, in the aggregate, everybody. If we sell 1 million policies to people like you, we have an idea in the aggregate what's going to happen, but we can't tell you who's going to have the accident, right? We
Yeah, it's hard because you know you got all these people who don't understand the industry trying to go to traditional capacity and say, "Hey, I'm going to throw all this risk at you," and those guys are, you know, everyone thinks, "Oh, they're just archaic and all that." No, they're rightfully scared.
yeah, correct. And then now there's the insurtech revolution of the last 10 years has pushed us at better technology. Like I am seeing changes everywhere, and
Right.
when I speak about how to engage millennials in insurance, and nowadays Gen Z, one of the things in the recommendations, or before going to recommendations, I asked the audience, does your working at your company offer this, offer that, offer this, and participate? Tell me yes or no. The fifth point was offer the latest technology. Like, we work in the latest technology, and when I first asked that question in 2014, the entire
Relative to
audience,
what?
yeah, the entire audience was like, no, quite simply no. In the last few years, it's more like, we're fine, we're getting there. We're much better than it used to be,
Right.
right? So I'm very happy about that. I'm very happy that InsurTech has finally pushed us to upgrade our technology. But yes, InsurTech, the first wave, most definitely did not care or understand profitability in our industry. They only cared about growth, and they paid the broken dishes for it.
Well, less than a year ago, I got an underwriting document that was done in WordPerfect.
No, Nationwide was still using Lotus Notes when I was there.
Yeah, I think USI still uses it.
Uh, right. Okay. Cool. So normally I ask, what else is coming down the pipe that you can already talk about? But you already talked about the newly patented
Right.
part of the
This is the first time I've mentioned it to anyone.
amazing, awesome, 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 awesome. So kind of flesh it out for me. What will the system feel like, look like, do once that is fully integrated?
You got your big old form you got to fill out here. You got a little drop zone that says drop it on there, take the PDF, throw it on there, and it just fills everything in. That's it. But that's all it should do, right? It should be fast and easy rather than typing 400 fields and getting them wrong and everything else. Now, there's some real things to worry about there. Like when you drag in, you take somebody else's application and you have a $2,000 and a $5,000 deductible, and somebody's requesting a $2,500 deductible. What do you do with that? So we literally just decide to slap the number $2,500 next to it. Don't fill it in, and if you want it, it clicks to up or down or whatever it can do. Whatever the closest can be. It'll drive you crazy though when you first start working with it. What is a broker, a company, or is it a human? Okay, so is it agent, broker, producer, originating agent? I mean, there's like 20 names for broker, and then don't even get out into total insured value. There's like 50 terms for that. So. And it just took iterative times with the AI to teach it. And we taught it over and over and over and over again.
Okay. We haven't really talked about the origin story. How did this come to be? How did you realize that this was a need?
I've been in the business forever. I've owned a couple of agencies, a premium finance company, a carrier, and a GA on my own. And I also did a .com. God, let me back you up. I'm an old fart, as I said. In college, there was a kid at the University of Texas who was starting a PC company, and I was one of the guys. I was actually working for him, putting hard drives in boxes on something like thing. And I decided I wanted to go to the insurance business, and I missed out. And Michael Dell told me, "Good luck, go to your firm." Yeah, that was a sad one. So I went to I did a year in grad school in Japan, and then came back and started in the family insurance business. Was house and car stuff, and I was a single guy in suburbia, and that wasn't going to last long. But I spoke Japanese, so I started writing Japanese industrial facilities. Got really big at it. Was the only broker I know that spoke Japanese. So where I was writing stuff I had no business writing. I had car plants and water plants and oil refineries. Japanese National Oil Company, a 20-something-year-old kid writing that. Now I had to have a lot of help doing it, but it was the smartest guy in the room who could speak Japanese, right? Anyway, sold that off and started in the medical malpractice business. Built probably the largest in Texas, sold that off to USI. Started a .com with a buddy of mine, and I actually had the domain name malpractice.com. On that very day, insurance.com was available, and it was available for free, and I couldn't figure out why I need it. Yeah, another missed opportunity. It's sad across the board, right? So anyway, sold that. When I left there, I had a non-compete. They paid me to go away early because I'm not a corporate guy, as you might notice. And they said, look, just honor your non-compete. And I said, all right, that's cool. Had some guys come at me and say, we can get you out of that non-compete. But I thought, you know what? They're doing what they said they would do. I'm going to do what I said I'd do. And I said, well, what do I do? Well, and I had automated my internal shop. So we started writing our own software. And we started a company called Single Entry. Boy, it was way overly ambitious for 1999. Then it ended up as a smoking crater in the earth. And then, yeah, it was bad. And then over time, the same partners and I came together, started a company called Virtual MGA. I stepped out to start a malpractice carrier. And, it's really interesting if you get ahead of the market itself, but you can also very easily get ahead of the regulators. What we wanted to do
Makes sense.
Well, you take capital for an insurance company and you dump it. If you're actually risk bearing, you got to dump that in as loss reserves. So there's nothing you can do once it's locked up in there. So you try not to put too much capital in there, try and keep that over in the holding company. And my idea with the regulators was, look, I want to recapitalize this insurance company every night at midnight. And they said, really cool idea. No way in hell we can regulate it. No, go away. So
makes sense.
Anyway, and then I'm sure you still can't pull that one off. You know, the regulators just aren't. They talk about, you think the industry is slow. The industry regulation is
Of course.
ridiculously archaic, and you know, I don't know. There's a lot of things in our industry that are. There's a good historical reason why they are, and you're never going to change.
So you had that very broad experience.
Correct.
So at that point, you sat down and you're like, you know what's really missing? This kind of technology. Let's build it.
Yeah. Well, I went from my deal when I sold to USI had an additional kicker in it. I said, look, I'm a young guy at that point, and if and this thing's a cash cow, 3 years from now it could be a heck of a lot bigger. Why do I want to sell now? And they wanted it for a whole bunch of reasons. And they said, well, okay, we'll give you a credit for everything that causes you not to be profitable. And I'm sure in their brains they were thinking, you know what, he's young, his group insurance is going to be cheap rather than the old guys. Well, what happened was they immediately converted me over to USI's internal systems, and my head count tripled.
Okay.
So every year when bonus time came around, I said, whoa, I want credit for these 8 people over here. And I want to be paid a bonus as if they weren't there. As you can see why I didn't last the full 5 years. They ended up paying it to me, but nobody liked it. So that taught me that there's a lot of savings in getting this stuff automated and automated right.
Perfect.
So,
Perfect. All right. How long did it take to build kind of the what we would call today the MVP? Like
oh God,
just enough to.
we started it in 2002. It was for Anderson and Murison out of California. And one of the founders, nice man, I miss him a lot. Horst Leckler, incredible story about he escaped from the Nazis and was on a train, you know, when he was like 5 years old, and then he came to LA and started that beautiful MGA. So that took us, and that was simple though. That was just quoting personal umbrella. You know, something that now that takes us 45 minutes, maybe. Back then, it took us a couple months to do the first one. So the MVP really was the scope of what you could do in 2002, 2003, and what you can do now is so different. So it's been an evolution. It's been an absolute evolution. Now we run everything on a core platform. So recently, someone asked us to add something, and all of our customers got it. So we had, it was some twist on risk clearance that was a little bit odd, and we gave it to, and we didn't think anybody wanted it, and turned out 4 or 5 other of our clients said, you know what, yeah, we'll take it. Is it free? We said, yeah. All right, we'll take it.
All right, constantly improving, and based on customer suggestions or asks. All right, Jay, it's been very interesting. Thank you for your time today.
Nice to meet you, Tony.
Very interesting. Yeah, when this goes live, I will tag both you and the company on LinkedIn. And
Okay.
again, if you run an MGA and you listened all the way here, go take a look at Underwriters Technology. Quite clearly, you listened all the way here, likely because you're unhappy with your technology. And if your clients aren't going out of their way to tell you that they love quoting with you because your technology is so far ahead, what do you have to lose? Give it, take a look.
Appreciate it.
Thank you.